Good morning, good evening, good afternoon. I'm Walt, and in this video, I want to discuss an article entitled "Can We Get Serious About Kraft Heinz?" written by Michael Ambrosius. I will go through and discuss some key points in this article, and I'll leave the link in the description box for anyone who would like to read the article in full. For those of you who may not know, Kraft and Heinz were two separate companies up until 2015, when a merger was agreed upon by the boards of both companies, with approvals by shareholders and regulatory authorities. Just wanted to get that little background information, just in case anyone was not aware. Let's go ahead and get into the video. Can we get serious about Kraft Heinz? Summary: Kraft Heinz has declined rapidly after this dismal Q4 2018 earnings. Changing consumer preferences and an SEC-issued subpoena have further added to Kraft Heinz sell-off. The fundamentals of the global economy and the strategic restructuring of Kraft Heinz have catapulted the company into a prime position for sustainable future long-term growth. Kraft Heinz not only had a poor quarter four earnings, but the value of its stock dropped $33.98 for the entire 2018 year. On 1/2/2018, the trading price was at $77.02. On 12/31/2018, it was $43.04. Adding salt to the wound. Adding to the disastrous results, Kraft Heinz acknowledged a downtrending valuation to two of its major trademarks, Kraft and Oscar Mayer, which led to more than $15 billion written down by the food giant. The Securities and Exchange Commission has also placed the company under investigation and issued a subpoena as a result. Wow, with the subpoena from the SEC, this would make me hesitant to buy any new shares until at least third quarter, when hopefully details can be revealed about the findings of the SEC's investigation. Positive. Let's get real. One only has to examine the fundamentals behind the stock to determine why this recent decline is a perfect opportunity for investors to swoop in for a bargain opportunity. Kraft Heinz products are viewed by almost every one of us on a daily basis, whether it's front and center on a store shelf, on an internet advertisement in the corner of your screen, at home during a commercial between your favorite show, or right on your coworker's desk. You see it every day. Do any of these brands look familiar to you? I've seen or used probably just about every last one of these brands. The human population is rising, and with that comes an increase in food consumption. Sure, the packaged food industry has been hit with a shift in consumer preferences toward less processed, fresher local foods. However, convenience is still king, and that, coupled with the affordability of these products due to the company's cost advantages from sophisticated supply chain management, will allow the company to continue to thrive as a consumer staple among the public. Another key demographic trend involves income inequality, a decrease in the affordability of housing, and the threat of a recession that speculators are convinced will occur within the next few years. Overall, this will leave consumers with less disposable income that they can use towards premium food products. Kraft Heinz do have a staple of products that we see every day, and most of us use all the time. So I tend to lean more on the side that this dip in the stock price is more of an opportunity to purchase more shares at a cheaper price, especially if you're looking to keep the shares long term, make money off of the dividends. I also strongly believe that there could be a recession in the coming years based on trends I've noticed in the financial sector. Even, I did a video on an article about over 7 million Americans are behind on their car payments. You can see that on my channel. I even touch on, the possibility of a recession in the coming years on that article. So coupling those two things together, I also have to lean to the notion that, if there is a recession and there's less disposable income, people will tend to be inclined to purchase less premium food choices. A key advantage Kraft Heinz has is ability to use its current stable sources of income, assets, and infrastructure to fund future decisions that appeal to changing consumer preferences. Towards the end of 2018, the company successfully acquired paleo-focused food company Primal Nutrition for approximately $200 million after determining the acquisition would generate approximately $50 million in net sales that same year. Right before that major announcement, Kraft Heinz was coming off of the fresh announcement of its acquisition of Ethical Bean Coffee, a leading roasting company comprised of 100% fair trade certified organic coffee. The acquisition of these companies successfully appeals to consumers looking to advance social responsibility, global awareness, and environmental accountability. To me, this shows that Kraft Heinz is well aware of the focus of the consumer being more organic minded, and that they're also making sure that they're providing products that provide the consumer that option, which to me is a good sign that the company will trend upward going forward. All right, this is the last point that I wanted to read in this article. Overall, the diversification of the company's available lines of products, the strengthening of Kraft Heinz' current portfolio of products, and its acquisition of companies specializing in addressing consumer changes represents a strong platform to foster stable and reliable growth going forward. Despite the company's poor Q4 earnings, as well as the loss in the share price, I still believe it's a great long-term investment, as the company historically has provided its shareholders dividend payouts. Also, the company does have a strong portfolio of products, and as you can see in the article, with the acquisition of those two companies that are more organic centered, that they're willing to step in there and provide options to the consumer base. So they're not only going to focus on their stable of products that are true and tested, but they're willing to do the research and make sure that they're providing options that's going to appeal to a new customer base. So in my opinion, I definitely think that, the fall in stock price is a value. And you see this from time to time. I remember years ago, maybe probably about 10 years, a little bit over 10 years now, or close to it, when Netflix had a steep decline in their share price. And right when they started, like maybe a short while later, they started coming out with their Netflix originals. And that spiked their share price overnight, in a sense. I definitely think that this could be one of those opportunities with a possible recession coming, them being willing to expand the market where you can get in now, buy a lot of shares for a reduced price, and be able to have more shares that you can profit off of and enjoy the dividend payouts year over year. However, I will be waiting until probably Q3 of this year just to see what details come out about the investigation that is being completed by the SEC before purchasing any more shares, just for my own peace of mind. But that does it for this video. Please like, share, and subscribe. And if you have any questions, just leave a comment and I'll be sure to reply.